Okay, guys, this is Brandon. How's everybody doing? We have an earnings play today at Crowdstrike, CRWD, and this has been a bullish stock, one of the tech favorites. And we're going to show you why this is probably one of the best shorting opportunities this week for earnings play. Okay, so we know that the techs are under pressure. There's a lot of divergences with the IWMs and all the financials and all the energy stocks just ramping higher, but the tech stocks have been under pressure, and this little dead cat bounce offers us a very good opportunity. So basically, what we have is a situation where CrowdStrike has been losing money, right? We got all of these money losing months in 12th to 2020, which is literally the Q3, they reported a profit and everything went nuts. They literally went hog apeshit in terms of the stock just ramping higher and things like that. But in general, this stock is expected to lose money. In fact, the EPS for this quarter, it is expected to significantly lose money. But it doesn't really matter. It matters on the guidance. And even then, with the market condition the way it is and the technical setup, we think that there's a significant opportunity to profit on these. And by the way, in 2020, there's just been nothing but insider selling, and there has not been any insider buying in this relatively young company. Now, so what we want to do is we want to look at the behavior of the earnings picture. Okay, so we have earnings reporting today after hours, and Q3 earnings, they beat earnings and it guided higher. They report after hours, remember that, and it popped and it ran higher because they reported a profit, and they were fairly bullish in their earnings guidance. Again, in Q2, September 2nd, okay, here's they report earnings after hours. They were they beat a lot of the metrics. They're still losing money, but they beat earnings. Everything was supposed to be fine, and they guided in line. And really, at this point, they're really trading at all-time highs as well. And really, we hit an all-time highs at that level as well. And then it gap down. They beat earnings in Q1, June 2nd, and they guided higher, but what it did was it popped and then it just dropped for the next couple of days. In Q4, March 19th, 2020, this is right after coming off of a massive sell-off from that crash, and it didn't really matter what they reported as long as they basically guided higher or they beat earnings like this, and it's just going to gap higher and then run higher. Okay, so why am I so bearish on this stock right now? Because it's been getting a pass. It's been nothing but bullish. And if you haven't noticed, I mean, this thing has gone from its lows straight up higher in this fashion. So it's due. The time is due, and the technical pictures are setting up in that way. So when I look at the daily, there is a significant RSI divergence. So what we're looking at is back in January of 2021, it hit its all-time highs here, making that head and shoulders, right? You can kind of see that. We can make an argument that this whole thing right here, from here to here, is another head and shoulders complex, or that it's going to now test the neckline right here. But regardless, this is a pretty bearish setup. Look at all these sell volumes and then declining volume as it went up, right? So what we are doing is we're looking at this situation. Now, the MACD looks like it's going to be bullish, but it could easily turn back down. This has a lot of range. Really, there's a gap right here that needs to be filled. I mean, this stock does not need to be trading at $200 levels. And with the triple or quadruple witching that's coming, we think that there's a significant volatility that's going to come in under the stock. Okay, let's look at the weekly. Same stuff. RSI divergence to the downside, and it's basically made like a double top or head and shoulders. Here's the head, and then here's the right side of the shoulder forming, potentially. Okay, and so this is this week. And so what is the range? It can go all the way down into this range here, and this does have a big range. The ranges that I calculated is very conservative, and I think if it basically reports inline guidance, or like every other tech, they're busy selling it at the top, which it is, then we're going to have significant issues. Look at the rising sell volume in the weeklies and then the death cross, okay? And then CCI went from the bullish and now it's crossed over. And if it pops below here, we're going to get a pretty accelerated sell-off in this stock. So come on, let's go short this, right? So let's look at kind of the focused earning Q3 December 2nd, 2020 earnings. Like I said, they they had profits. Okay, so of course it's going to run higher, and it moved higher about 23 points after beating earnings, and this was trading at 179 level at that time. Let's move on to Q2. And Q2 is same situation. The earnings, they beat earnings, guided in line. And remember, if they don't beat guidance, they're going to sell off. And so what did it do? It closed here and then it gapped down. Okay. And then it tried to recover and then it fell down. So basically, what we need to understand is that this thing, if it guides in line or it misses guidance, it's going to sell off hard. Okay, and this thing is, dude, this is absolutely stretched to the max. And then Crowdstrike Q1, June 2nd, 2020 earnings. They beat earnings. They had good guidance, and then it popped and it kind of gapped up here a little bit, and then ran higher and then sold off, and then sold off for 3 days with a range of 15. Remember, this thing just back in June was a $92 stock, so this thing is stretched to the max at the moment. Now let's look at the Q4, March 19th, 2020. This is something that we need to pay attention to. There's not a lot of history on the Q4 because this is relatively new stock. But anyways, in March 19th, they beat earnings and they guided higher. And what happens in the guiding of when they guide higher, it runs up higher. But on that day, we can short the pop as it popped, and then range was about 5.15. Not bad for a stock that was trading in the $37 range. However, okay, remember in March this was a $33 stock. Okay, guys, just take that in, okay, and tell me why this is not a good shorting opportunity. But here's Q1. I went back to 2019, July 18th. This is where they basically EPS missed, revenue speed, and then they guided higher. And so we had a 1 day after it popped to short the pop, okay? Okay, and then after it did that on the day one range, $4.75. It was at that time trading around 79 cents and $79, and this is a pretty volatile stock, but it ran up higher. So what are we thinking about here? So here's our tickets, really quick and easy. Basically, Crowdstrike is a prime shorting at the prime shorting position right now. Okay, it is making all the bearish signs. Insiders are selling. The volume does not support further upside, especially in this corrective phase. Okay, and frankly, I think Crowdstrike is just set up that if they miss guidance or guide in line, it's going to fall. And this is kind of the conservative expected range, 28.5 to 32.7. It is best to wait until the market open to initiate the put positions for about 2 to 3 days. And I think this will give us a nice 400 to 600% returns if you can kind of time it. Even if it's bullish and it pops higher, you wait for the pop, you should be able to garner pretty decent return. So anyways, good luck everybody.